Hey everyone, and welcome to Earnings Cheat Sheet for Friday, August 22nd. It's Alexis, Garcia, and Ed Carson here, and we'll be taking a look at some key upcoming earnings reports to help you prepare for the week ahead. And Ed, it's been an interesting week in the market. Investors digesting comments from Fed Chief Jerome Powell at Jackson Hole. We've got a bunch of earnings on the horizon. So, what do you have for us today?
Yeah, with people wondering about is AI euphoria all deserved? Well, we're going to get Nvidia earnings next week. And also going to take a look at a couple of retailers that have been acting pretty well, Five Below and Urban Outfitters.
All right. Well, let's start with Five Below, which is scheduled to announce Q2 earnings on Wednesday, August 27th. Earnings for the discount retailer are projected to rise 14% to 62 cents per share. And revenue is seen climbing 20% to $995 million. Here's why we're watching Five Below. Investors are going to be looking to Five for commentary on tariffs. We'll also want to know if shoppers are trading down to discounters like Five Below, and store traffic will be a clue there. And Ed, on the last earnings call, Five Below CEO, that they've had just a real laser focus on delivering a great customer experience that drove really strong financial results. And as you mentioned, it seems like retail has really been an area where investors are looking to for shelter. So, what's on the radar with Five Below?
Yeah, I mean, it's been doing really well. And, this is an environment, shopping an environment where discount retail as a business can do well because people trade down. They're going to go shopping. Now, I will say this is more like some specialty items. So maybe you don't have to buy them, but if you're going to buy them, maybe shop at Five Below rather than somebody else. And obviously for the market, similar reasons. When you have that kind of worries about the economy, people will go there. But definitely have to wonder about, are they handling tariffs? I mean, those are things that are going to be impact, whether it's they're importing things or they're, getting things from domestic suppliers, those prices might be rising too. So what can they pass on? What can they find efficiencies from? So, this is one of the leaders and want to see how they can handle it.
All right, Ed. Well, let's take a look at the chart and see what the story is there because looks like this one's been setting up really nicely. It broke above this flat base buy point here in mid July. Looks like it maybe broke a mini trend line here with this bounce off the 10-day line, but it seems like this is setting up. So, what are your thoughts with the technical action?
Yeah, technically, it's still sort of in a buy zone above that original flat base. That's still valid, but I think, yeah, there's sort of an emerging new base that's trying to form. Perhaps, I mean, it may not form by the time earnings come around, but just getting above the highs from recent days, you could sort of treat that as an entry. You would be getting above the bulk of this new action here, sort of in that, and I think that would be actionable on earnings, and just see how that goes. It had done a big run up, so it's nice that it paused for a while. And the market has really done well here because the RS line has moved flat. See a lot of stocks that paused like a month earlier, like or didn't really money. Their relative strength lines lagged and they really haven't come up. But this one, the market's basically gone sideways too in many ways. So you're not seeing the RS line lag. So that's really nice to see. Some a pause, but not seeing it really lag. So I like that technical action after a big run.
And if we look at the weekly here, I think there was a 3 weeks tight here.
Yeah.
Over the last month or so, and it looks like again trying to move up above these recent highs here, Ed. But any thoughts with the fundamentals? Because it looks like things are slowing down on the earnings side, but strong sales for Five Below. So any thoughts there?
There has been choppiness. You look at some of those numbers and you go -2, -36, +62, minus like, so that is an issue. I mean, that I think investors could be surprised, or they might say, "Oh, well, this next quarter is going to be this," and it's like, "What? I was expecting." So I think that is an issue. It's another reason why, because it's one thing when you have a company that steadily turns in, "Oh, it always does this, it always does this." This one does not, and so the stock could gap up on earnings, but it could also gap down. So I do think that choppiness on that front is something we're about. The sales growth while it's not super smooth, has been steadier. But yeah, so reason to wait and see what they have to say.
And as we talked about retail, you can see ranking number 7 right now in those industry groups. So doing fairly well as this market kind of continues to work through some things, Ed. But let's go ahead and shift on to another retailer, Urban Outfitters, which is also scheduled to report Q2 earnings on Wednesday, August 27th. Earnings for the clothing chain are expected to climb 19% to 148 per share, and revenue is projected to rise 9% to $1.48 billion. And here's why we're watching Urban. Again, we're going to be looking for commentary on those tariffs, and executives will be looking to allay any concerns about specialty apparel. They have newly closed rental. That business has been strong, while Free People and Anthropology brands have done pretty well for Urban Ed. And with last quarter, the company saw record revenue and profits with sales growth across all segments. And that Nuuly brand, that rental clothing brand, saw a substantial 60% increase in net sales. So, real strength there. But again, I think the main headline here is going to be tariffs.
It is. I mean, we have more certainty in the tariffs. A lot of things will be from Vietnam. I don't know about specifically from Urban, but that's one of the big apparel makers, and probably will big help set the prices for things. 20%, gains. That's something. y- Since Urban Outfitters still has some of the trendy, we all talk about often in the markets. You want the trend to be your friend, and that is so important in apparel, because good luck passing 20% price increases if people aren't that excited about your clothing. I mean, and that's what it comes down to. But so can they continue to do that? That's the issue there. Obviously, people it has done well. I mean, it has done well. It's been able to do it so far. Uh, can that continue? To pass that on is really what it comes down to.
All right, well, let's take a look at the chart because we can see Urban tried to move out from this cup with handle base here at the end of July, hit this high of 80.71. But, in recent days, Ed has really sold off. It broke that 21-day line on August 19th. And, looks like it's looking for support here at the 50-day.
Yeah, I mean, it's easy to like stepping back. It doesn't look too bad, but it sort of round tripped a gain of not 10%. So it's not the worst thing, but it came out there and it just sort of fell back, found support where you'd like it to. I can think that people who bought the breakout probably would have wanted to get out, especially with earnings coming up. That's just sort of the way it worked. Again, if there's strong earnings reaction here, moves higher, and also earnings will be coming out after a lot of other things that are going on. So maybe there'll be some more market certainty. So if this looks good, the market looks good. There's probably could be a buying opportunity here, but again, this could also sell off. This is not a spot. People who are recent buyers now, people who bought at a prior buy point, like back in May or further back, well, they can hold. They have enough cushion, probably to handle it. Uh, but for recent buys or new buys, I think you just have to wait.
And we can see the relative strength line Ed here kind of having similar action to 5, just kind of moving a little bit more choppier, but trying to hold steady here with all the wild market action that's been going on this week. I'm going to switch over to the weekly and just get your thoughts here. And again, it looks like we had that 3 weeks tight, but we see EPS growth again looks like it's going to be decelerating and sales growth trying to hold steady. So, any thoughts there?
Yeah, I mean, been really impressive EPS growth, but the combination, though, it's going to be tougher comparisons, and the tariffs just going to make it harder to, even if they can pass a good chunk of the prices on, that's just a concern. But yeah, it's been really strong. That would be another thing. It's like we've had this big run in the stock in part because there was this really strong profit growth. Uh, if it slows down, it just may mean that the trajectory of the stock is slower, even if it continues to do well.
All right, Ed. Well, I think those were kind of the potatoes to the meat that we're now going to serve with NVIDIA, which is scheduled to report on Wednesday, August 27th. The AI Titan is expected to see Q2 earnings jump 47% to $1 per share, and revenue is expected to grow 53% to $45.87 billion. And here's why we're watching NVIDIA. I mean, NVIDIA has really been the market for a while. The chip maker could miss Q3 guidance due to China business timing. Analysts will look for progress on the Blackwell ramp up and any comments on rumors about the delay in next year's Rubin launch. And of course, demand commentary is going to be critical, especially with a lot of talk that's been going on with the lack of generative AI return on investment for enterprise users that we've seen out there, Ed. We had an MIT study showing that I think it was 95% of companies trying to build some of these AI initiatives are failing. If I'm getting that correctly, that's been a spot of bad news. And then we had OpenAI Chief Executive Sam Altman saying that he thinks we're in an AI bubble. So a lot of chatter going on about the state of the AI theme, which has really been driving a lot of growth in the market and the economy here.
Yeah, I mean, the demand is gonna be the Uber thing because not just for NVIDIA, but for everybody else. Yeah, Meta froze hiring, on AI supposedly, and that's after making these massive things. So it does feel like there's a little more caution out there, just a little bit. And that's one reason why we've seen some AI stocks and growth stocks come off highs. Again, they've gone on big runs. Keep in mind, a big reason for the February to April sell off was because of this whole deep seek concerns, this concern that maybe AI spending was going to slow. It wasn't just the tariffs. There was a lot of things, and you saw that with NVIDIA, really big drop. That Euphoria returned. A lot of reasons we haven't seen the slowdown in spending, but that always is a concern. Uh, a lot of things with NVIDIA, like NVIDIA's facing more competition from AMD. For a while, it was like it didn't really matter what anybody else did. NVIDIA had the best, it was the best. Just a little bit more concern now that maybe AMD or others could be catching up. So if NVIDIA is having trouble with the Blackwell ramp, or if Rubin is going to be delayed, it's like, is that going to open the door for things? Stuff about China is like, they are going to, this sort of weird deal with, you know, that they're going to be allowed to sell to China, giving a bunch of money to the US government as part of that. Will China actually buy many of these chips? There's a lot of some questions there. So there's some NVIDIA specific questions on top of that, but it is a huge implications for the market, especially with the market being just a little bit choppy right here. Was that just a pause and we're going to take off again? Or is NVIDIA going to signal maybe broader concerns or just a little bit of less euphoria? It doesn't have to mean that things are bad. Obviously, AI spending is going to be strong. Obviously, NVIDIA's earnings are up and all that, but it's just about, is it going to match the lofty expectations?
And we're on the daily chart here, Ed, and you can see that nice run since hitting those lows back in April. But looks like shares are coming under pressure here. Again, we saw this upside reversal on that wild trading day on Wednesday, but solidly below this 21-day line here. So, where would you like to see this set up ahead of earnings? I mean, obviously, if you bought this breakout back here, you might have a little bit of room, but how are you approaching NVIDIA?
Yeah, I mean, I don't have a position. I think that if somebody bought yesterday, as it sort of bouncing, started to bounce, because on a weekly chart, it probably was bouncing off the 10-week line or pretty close. Yeah, pretty close to that. So you could have done that, I suppose. Again, earnings are really close. So can you build up enough cushion now? NVIDIA is a stock that certainly could go up 10% before earnings. So that's possible, but it does makes an issue there. Uh, other than that, or consolidating around the 50-day or 21-day line or something like that, and then moving off that. I suppose there could be an add-on buy point. I feel like for a new position, it might need a longer base or maybe another pullback to the 50-day line that isn't before earnings. But this one took a long break and made a run. And if they put out strong earnings and guidance, this definitely could go on another run.
And I'm going to switch back to the weekly here, Ed, and just take a look at some of these fundamentals because we can see, growth is slowing, but, hard to keep that pace. I mean, NVIDIA has
Yeah.
really been charging and really leading the drive in this AI theme. But again, spectacular sales revenue percentages here. Anything else jumping out to you with NVIDIA and the fundamentals?
Well, the up down volume is really impressive, 1.5. It's sort of weird. I'm not quite sure where's that from. The AD rating is still a C minus. I think that might be some selling from several weeks ago, some months ago. But but the up down ratio is showing a much more positive trend race lately. So again, there's been a lot of buying. You look on that weekly, lots and lots of weekly gains. This is the first real down week. So in some ways, it's a nice shakeout. Again, if it weren't for earnings, it'd feel a little bit more interesting. I think it would have been still actionable, but that's why with earnings coming up, I think people should be cautious at this point with new buys. But really, really nice action.
All right, Ed. Well, those were some of the big names on our radar, but There's always more. Let's take a look at CrowdStrike, which also post earnings on August 27th. A big cybersecurity player. We had Palo Alto results. We can check in on those really quickly and see how Palo Alto did. Looking like Palo Alto had about a 27% EPS gain, but again, looking like it may be jumped up a little bit after earnings, Ed, but let's go ahead and check out CrowdStrike and see uh, your thoughts on this chart. Looks like it's been in a solid downtrend here since May.
Yeah, I mean, there's some software names that are this week and then but in this coming week, software is struggling. I mean, it's not exactly clear all the reasons why. Maybe that if you feel like AI means there'll be fewer tech jobs, that maybe they'll be it's not that they'll replace CrowdStrike. In fact, CrowdStrike will use AI, but maybe there'll be fewer employees that'll be using CrowdStrike and you're doing these per site, seat subscriptions. It'll be, well, where will the growth be? It's stuff like that. I'm not specifically on CrowdStrike. It just seems like a lot of software makers. So can this bounce? I mean, maybe you could do something opportunity line, which is sort of back close to where the old buy point was, way back around 400. So, but it's still below the 50-day line. There would be a fair amount of overhead resistance. So it'll be important to see how this one goes. Again, it's still trying to work its way through that disaster from last year, about a year ago. So the numbers probably aren't going to be great because, you know, they've had to, probably offer deals and customer growth has been weaker because of that whole outage that hit everything. So it'll be interesting to see for software and for other cyber plays, see if this one can straighten out.
Yeah, we can see estimated 10% loss this fiscal year, but hoping to return to growth next year, Ed. Let's take a look with another player there with Snowflake. This one reporting on August 27th. And, a lot of choppy action here recently, Ed, but thoughts here.
Yeah, some pretty ugly selling there, and again, software is just getting hit. I don't think there's necessarily specific news on it. It's sort of fallen back to the buy points, the prior two buy points, sort of vaguely, in there. Sort of round trip. It's basically almost round trip, a pretty good size gain. And you don't want to be doing that. I think that people who bought it should have taken out opportunities when it broke through the 50-day line for sure. And then definitely when it broke again, that when it went back below 200, maybe exiting. And I think this needs time to set up. Could it do well off of earnings? Sure, but then it'd be a sharp drop. It's still below the 50-day line, barring a huge gap up, and it just looks like it needs more time to set up.
Okay, well, let's take a look at another software name, Ed, with Nutanix. Earnings due there again on August 27th. And, we see this break of the 200-day line back here on August 11th, I believe. And it looks like it's trying to get some solid footing here, Ed, but same thing, not looking great with the RS line either. Looks like this one is just maybe trying to find some footing.
Yeah, it's chopped around a lot over the past year. I mean, bad earnings breaks, a few of those, failed breakouts. It looked, as you're saying, yeah, it sort of tried to do some early entries, but that failed. It just seems like there's a lot of work. Yes, if it gets back above maybe some of those areas, but it seems like it needs some repair work, build the right side of a base and something like that. Uh, it just hasn't been acting particularly well, even though it still has solid growth.
All right, let's take a look at Dell Technologies, scheduled to release earnings on August 28th. This one looked like it was trying to hang up by recent highs over here, but again, selling off the last couple of weeks. Again, seeing that bad sell off Wednesday with that market action, but flirting with this 50-day line.
Yeah, I mean, I suppose a strong bounce off of this, you could treat this area as a handle to a base, maybe going back to last November, that we have 147. So that is a proper handle from that perspective. It's run up quite a bit. It was a very deep base, which isn't good. So it's nice that it's fine. But if it rebounded off the 50-day line, maybe breaking the downtrend of the handle off of earnings or just getting above that handle would offer an entry. But yeah, so it'll be interesting to see because along with Nvidia, uh, that'll be coming in. Those would be a couple of AI infrastructure names there.
Yeah, Wednesday is going to be a busy day for earnings.
Yeah.
We'll get you some extra caffeine there, Ed. Let's look at Viva Systems again, due on August 27th, and this one, nice tight action here around. It looks like a conjoined 50-21 day line, Ed, but looks like again this one's trying to move up out of some recent downtrend.
Yeah, I mean, this one held up a lot better than a lot of other software makers. It gapped up on earnings, so the relative strength line has faded since then, but it is after a prior run, so it's not like there was an uptick. I mean, this is trying to come back after sort of not really outperforming for many years as life sciences software maker. I mean, I would you could probably still call that 291 area still a valid buy area, even though it dipped into the sell zone. If it got above these recent short-term highs off of earnings, there's probably some short-term kind of level where you could do that on earnings. So yeah, it was sort of frustrating. There's when a lot of these names, again, with the market being choppy, there were these setups and then things that just sort of fizzle. And now it's one thing if you're really extended, oh, it pulls back a little bit. Who cares? But if you're just getting these new buys, it looks worse on the charts, even though that the loss wasn't that massive ultimately, but it's just not at the right time for Vive.
Well, as we know, market timing is everything. Let's take a look at trip.com. Earnings due there again on August 27th. This one, again, some more choppy action, but looking like it's at that 200-day line.
Yeah, growth is slowing because it's like this is China based, so there's huge gains for a while as basically China broke its COVID restrictions, but it just hasn't been doing particularly well. I mean, there might be something actionable if it moves off of there, but it seems like there's other names like notably ATAT, Atour Holdings, that has been doing better. It's in the hotel space. That also could have earnings soon. I'm not sure if that's been officially listed, but that one seems to be in better shape. But Trip.com, if nothing else, will give an indication of maybe travel demand in China.
All right, let's take a look at another China name with Li Auto, the EV maker there, due on August 28th. And talk to me about this chart. We've seen a lot of selling action over the last couple weeks, and this one is way below the 250-day,
Yeah,
or excuse me, the 10 and 40-week lines.
yeah, a lot of damage here. I'm not sure why it went so strongly. There's a lot of competition in where it competes, and it had a disappointing 2024, and earnings are going to fall again this year. There's hopes for growth next year, but again, there's a lot of companies in competing and where Leah has been doing. If Lee does well, then everything's going to be fine. It'll rebound, but it is a really tough business in the China EV market.
Yeah, let's just hop over to BYD, also in the China market, potentially having earnings next week as well. And again, this one just seems to be hitting a ceiling here at that 40-week line.
Yeah, and this one has growing earnings this year, but there's a lot of it's facing competition in domestic. I mean, it has some export growth, something that Lee really doesn't have. I mean, Lee is all basically local, which makes it really difficult. BYD does have the escape valve of sales growth overseas, which also tend to carry heavier margins, but it's tough. I mean, this is by far the world's largest EV maker. It's still growing, but it's just it is a really difficult business to compete in.
All right. Well, we started with some retail names, so let's wrap the show with looking at some more retailers. How about Abercrombie and Fitch? Due there on August 27th, still on the weekly. And this one was one we were talking about a lot, late last year, early 2025. But seems like it's really sold off here, Ed, and trying to come back. So thoughts here.
Yeah, I mean, they had this amazing earnings growth, and that's when we talk about like the trajectory is going to change, and the earnings were still pretty strong when things fell apart. It peaked when the earnings were just absolutely impressive, amazing, and the earnings were still pretty solid when the stock really sold off. And there was probably guidance on there as well or whatever, but it's just an there was obviously the tariffs and other stuff that came in, but it didn't bounce back like where others like Urban and others bounce back. This one has a long way to go. And again, the earnings are supposed to fall this year, and they're not really supposed to bounce back after mammoth growth. So, what's the story? Why would it be really ramp back up in maybe a difficult environment?
All right, let's take a look at American Eagle since we're looking at Abercrombie here. This one, again, kind of a very long downtrend here. Looks like it's trying to come off the bottom.
Trying to come off the bottom. Obviously, honestly, this will get a lot of attention because people want to put Sydney Sweeney into their photos and stories. I mean, it'll be interesting to see, are they getting beyond all this silly,
Well, for the SEO clickbait, you're
yeah,
saying.
yeah. They're gonna be working on that, but will they are they seeing anything in the real world? Is that generating thing? Yes, there's tons of buzz and media attention, social media attention, but there's that. And this one obviously didn't have as big of a run as Abercrombie. It's coming lower. I just want to see how that goes.
Okay, how about Dick's Sporting Goods? And I'm switching back to the daily here. Uh, Again, this one, some more choppy action and consolidation, but looks like it's trying to move up higher here from this 220 level. But thoughts here?
This looks more like how I would play sports, sort of jerky and all around the place and not making much progress. I think the big sell-off a couple months ago probably was tied to the Foot Locker, that it's buying Foot Locker. So, I mean, and that might pay off long term, but that's just a lot of things. I mean, maybe it forms a handle here, but it looks so choppy and messy and sideways. It just doesn't feel particularly appealing here right now.
All right, well, let's look at Dollar General, Ed. Again, it seems like discount retailers holding up. This one kind of seems to be range bound here since this last earnings gap up back in June. So, thoughts here on Dollar General?
Yeah, it's sort of been holding steady since then. Yeah, I think a strong move off of here could be actionable, sort of along with Five Below. And again, tariff commentary, and maybe they're doing great with that. But we'll have to see how they do.
All right, let's wrap with Ollie's bargain outlet due on August 28th. This chart looking a little bit better here, Ed. Seems like it tested that 50-day line, but looking for support at the 21-day.
Yeah, I mean, probably somebody could have tried something off the 50-day line. I mean, now there's not much cushion. It looked like there might be, but now there isn't. I don't know really where this goes. I'm just not seeing a great entry. And you see there's a lot of failed breakouts. I mean, it has made progress, but boy, this has been tough. So I probably want to buy this off the 50-day line or even the 200-day line, and not a plunge to the 200-day line, but like some kind of pullback to that might be safer because it is trending up, but there's just whenever it actually tries to move to highs, this it often struggles. So that would just make me nervous in that front.
All right, Ed. Well, thank you again for all your insights this week. You can catch more market analysis by tuning into Stock Market Today. That goes live after the closing bell. And thank you all so much for watching, and we'll see you right here next week.